The Japanese yen remains the weakest currency, as recent sell-off pushed US dollar Japanese yen through the 80 psychological level briefly today. Speculation of additional easing from the Bank of Japan, as soon as next week's meeting, intensified further. It's reported that bank officials are already discussing additional measures to boost recovery that include expansion of its asset buying program. Meanwhile, political pressure continues to be on the central bank. Seiji Maehara, the first minister to join a Bank of Japan meeting in nearly a decade, said he'd probably join next week's meeting again. Maehara said today that he hopes to continue calling on the bank to pursue powerful monetary easing to achieve, at an early date, its 1% inflation target. US dollar Japanese yen retreated mildly after breaching 80, but that should be relatively shallow. We expect broad-based weakness in the yen to continue in the near term. The euro continues to consolidate in a tight range against other major currencies except the yen. Moody's downgraded ratings on 5 Spanish regions, noting that the downgrades were driven by the deterioration in their liquidity positions, as evidenced by their very limited cash reserves as of September 2012, and their significant reliance on short-term credit lines to fund operating needs. Elsewhere, it's reported that the European Stability Mechanism is facing another legal challenge as an independent member of the Irish Parliament reached EU Court of Justice. And the Luxembourg-based court has engaged a full force of 27 judges to consider the challenge. Canadian events will be the major focus today. The Bank of Canada is expected to leave rates unchanged at 1%. Key attention will be on whether the bank will change the wordings of the statement to remove the tightening bias. The bank said that some modest withdrawal of the present considerable monetary policy stimulus may become appropriate last time. But recent comments from officials hinted that the economic outlook has somewhat deteriorated recently. Bank of Canada Governor Carney warned last week that the synchronous slowdown underway in the global economy could spill over into Canada. And the central bank's revised forecast this week will take into account the impact of the uncertainty. Finance Minister Jim Flaherty said that economists have told them to anticipate moderate growth, and the economic forecasts may have to be revised downwards. The Canadian dollar's weakness has been clearly felt recently. Euro-Canadian dollar is now at an important junction, pressing the 55-week exponential moving average and the long-term falling trendline resistance. Recent developments suggest that a medium-term bottom is at least formed at 1.2126 on bullish convergence conditions in the weekly moving average convergence divergence. Also, the hold downtrend from the 2008 high of 1.7511 might be finished too. Sustained trading above the 55-week exponential moving average, now at 1.2978, will affirm this bullish case and target 1.4378 key resistance. In any case, the near-term outlook will stay bullish as long as 1.2573 minor support holds.